Because the big buyer now of gold in the world is other central banks, not the US or European central banks or the Japanese central banks, but China, Russia, India, countries that are looking at what the developed world is doing with its finances and concluding that we got a major currency crisis coming, so that in effect they've lost confidence. Like you said, they've lost confidence in the dollar-denominated global financial system, and they're buying gold as protection, and they're buying it pretty aggressively. The world's central banks were net buyers of 1,000 tons of gold in each of the past 2 years.
In today's market recap, China's $170 billion gold rush triggers Taiwan invasion fears. Beijing on record 17-month buying spree in what experts say is a move to guard against sanctions. Silver set to surge in 2024. Silver market continues to capture the attention of investors and industry stakeholders. Silver's unique properties, such as high reflectivity and excellent electrical conductivity, make it a critical component in numerous industrial applications. Factors influencing the silver bullish market in 2024. The ongoing supply challenges, including the deficits reported in previous years, will likely continue due to limited new mining projects and regulatory hurdles, particularly in significant silver-producing countries like Mexico. Additionally, geopolitical unrest, especially in Latin America, could further strain supply chains, enhancing bullish sentiments. On the other hand, economic and financial indicators will also play a crucial role. The interplay between interest rates and silver prices will be critical, with the Federal Reserve maintaining a hawkish stance amid inflation concerns. Now we'll show you the best clips of the latest interview, but first, smash that subscribe button, hit the like button, and check our links in the description for some massive sign-up bonuses. Enjoy the episode.
Because the big buyer now of gold in the world is other central banks, not the US or European central banks or the Japanese central banks, but China, Russia, India, countries that are looking at what the developed world is doing with its finances and concluding that we got a major currency crisis coming, so that in effect they've lost confidence. Like you said, they've lost confidence in the dollar-denominated global financial system, and they're buying gold as protection, and they're buying it pretty aggressively. The world's central banks were net buyers of 1,000 tons of gold in each of the past 2 years. In a market where the mines only produce 4,000 or so tons, that's a huge new source of demand. And then in the US, something is happening that's very interesting at the big box stores. Costco and Walmart have started to sell gold and silver. And now it can be an impulse buy. You can go to Costco and while you're checking out, say, oh yeah, toss a gold bar into my basket while we're at it here. And apparently people are doing that. Costco is supposedly selling $200 million of gold per month, which is a couple of $1 billion a year. And that is a big addition in demand that didn't exist before. So it's clear that this precious metals bull market is linked to a loss of confidence in the global financial system. And to the extent that the central banks are shown to have no tools left to fix their problems. In other words, they have to choose one crisis or another, but they can't choose the path of no crisis, steady organic growth with minimal increases in financial burdens for everybody. That's foreclosed now. We can't do that. We either have to choose a deflationary crash like the 1930s or at a minimum, a currency crisis like the 1970s, but it could be a lot worse than that. So the central banks of the world who aren't in this box are watching the big developed world central banks flail around in there and realize they have no way to fix their problems. And those other central banks are buying gold aggressively. So yeah, I think that gold is being bought by people who have lost confidence in the system, and the higher gold goes, and the more flailing around the world central banks do, the more people will be in that position where they don't like what they're seeing, they're losing trust in the big systems, and they're going to protect themselves with gold. So it's possible that we reach a point in the not too distant future where an awful lot of global capital tries to get through that small door. there's probably 100 times as much investable global capital in the world as there is gold at current prices to satisfy that demand. So let 1% more of global capital flow into precious metals. And you've got, people will be talking about it's not gold anymore, it's unobtainium. You just won't be able to buy it if you decide you want it at that late date, and you'll be wishing that you'd bought some now or bought a lot now. So you kind of want to get out ahead of something like this. It's a fairly simple story when you just go from rising debt leads to rising inflation, leads to financial instability, leads to gold and silver going through the roof. That's really, those four sentences are basically all you really need to understand this world in a basic level. And so, I think the simplest thing for people listening to this and wondering what they should do about it would be just buy some precious metals, and then start looking at the other real assets that governments can't make more of, and see what kind of capital you have relative to those assets. And if you can buy some more, if you can buy farmland or a homestead or something like that, awesome.
John Rubino, an economic analyst, draws parallels between such investments and historical cycles of conflict. He highlights a trend of escalating global tensions and the emergence of war cycles, which he argues are driven by growing economic instability and geopolitical rivalry. As governments grapple with the fallout from massive debt and fiat currency inflation, military spending often increases, leading to more frequent conflicts. In this volatile environment, assets like farmland, gold, and silver become more attractive as they historically retain value during times of crisis. In the continuation of the episode, Rubino explains the recent moves made by Bill Gates, primarily recognized for his monumental contributions to technology, as Gates has recently made headlines for another significant investment, farmland. The billionaire has quietly acquired a massive agricultural portfolio, making him the largest private owner of farmland in the United States. This strategic move is widely interpreted as a hedge against potential economic downturns, aligning with a broader trend where wealthy individuals and investors seek tangible assets to safeguard their wealth in an increasingly uncertain global economy. Like, subscribe and turn on notifications so you do not miss out our daily recaps. Let's get back into the episode.
We progress from, the breakdown of the current fiat currency system to some kind of a monetary reset where we go back to a gold standard or whatever, if we have the right people in charge. And those people would probably be the guys we consider now to be populist. Corporate Democrats and country club Republicans are not going to fix this because this is their gravy train. They're making money from this. So they're going to run this thing right to the very end because it's their job to do that. So politically, I don't want to get people's hopes up and think that one election is going to change things in a way that gives us some kind of utopia, because that's not going to happen. There's going to be a gigantic crisis involving all the debt that's been taken on. But that's not to say our votes don't count, because if we elect the people who are mistrustful of the current system, that's going to be very messy, but we'll have the right guys fighting for us. So you never want to fall in love with any political philosophy or any individual politician because they will break your heart. But generally speaking, if you look at people like libertarians and populists, that you'll have a better chance of getting somebody who, by and large, on balance, does things that work in your favor than if you just go back to business as usual. If you elect the Clintons or the Bushes again, or their cronies, put them back in power, or keep them in power, nothing good is going to happen. And one of the big reasons, one of the big differences between today's populists and today's elites is that the elites make money from war. The military-industrial complex basically decides where we should invade next. We go do that. We destroy the economy and the military of whoever we're invading. They have to rebuild by buying new weapons. We insist that they buy weapons from General Dynamics and Raytheon. Raytheon and General Dynamics then contribute to the political campaigns of the guys who started the war. That's a cycle that it risks destroying the human race if we don't stop it. Look at what Bill Gates is doing. One of the richest guys in the world is now one of the biggest owners of farmland in the world because he's been buying up farmland with his tech money for the last 5 or 6 years. You want to emulate somebody like that if you can. And then other commodities are incredibly cheap compared to financial assets. So historically, when copper and zinc and silver, if you call it a industrial commodity, when they get down to current levels relative to the S&P 500, to financial assets, they usually take off and have a nice long bull run. So it wouldn't have to be just gold and silver in the commodity space that have big runs. I think copper is a great story, and uranium is a spectacular story. And there are lots of other less well understood kinds of commodities that are going to be very big in what the technological future looks like. So mutual funds that buy critical metals and things like that might be interesting too, or might do really well in a currency crisis. So, there's lots of things you can do. This is an interesting investment thesis. It doesn't have to be the world is coming to the end of its rope. Oh my God, what am I going to do? It's okay. Instability is coming. We're going to see a lot of consequences for our past mistakes. We'll, do a monetary reset at some point. We will fix this problem. But in the meantime, you can profit from all the chaos that's going to ensue if you do this and this and this. And most of the prescriptions, most of the things that you want to do involve real assets that governments can't create more of, So create a commodities portfolio running from physical assets that you own in person out to physical ETFs that go out and buy those commodities, all the way out beyond that to the stocks of the miners, and spread it around cautiously, and decent chance you'll be in good shape as this all plays out.
What do you think of the current gold situation? Is John spot on in today's episode? Share your honest opinion in the comments down below. Share this video with a silver bug and watch this video right here because you'll love it. I see you on the other side.